last one for October. I think we actually only have 7 more left. Our last one will be on December 15th, and then we'll be taking 3 weeks off, and we'll take all your email addresses and we'll reschedule into a new webinar link. That'll come out to everybody and we'll be good to go. Today, our education side of what we want to share with you is, what do we call a stock replacement strategy that has protection? And I know a bunch of you are here today, but what would be a stock replacement strategy that would include some protection? There are a couple different answers here, but I'm going to ask you guys, since you guys are, well, a lot of you are obviously from education. What would be a stock replacement strategy with protection? Poor man's collar. Love it. Poor man's collar trade. What else? Well, collar trading is not a stock replacement strategy. Because we're not replacing the stock, we're still using the stock, right? There we go. Leap long call. I like it. Any other ideas from anyone? But actually, it should be a leap long call with added long put protection as needed. A shorter term leap, a shorter term covered calls, eventual long puts. Abraham, that's actually a poor man's collar trade, which is excellent. Poor man's collar trade is the leap long call. And a leap long call, a leap just means more than a year. A leap long call with long puts and short calls in a shorter period of time. Anyway, the last one I was thinking of is a leap bull call strategy. Why do you get that 4 in there? Which is a leap long call with a leap short call. And I'm going to go over that with you tonight, because as I was looking at some of our positions, we've done really well on Micron. And this particular trade, we started with $27,000. And probably to start the trade, I'm going to say we added another $3,000 over a period of time to buy puts. This was started back in June of 2023, June 5th. Today's being October, so we have June, July, August, September, October. This was a 2-year, 5-month trade in the making, basically. We're hopefully going to be done with it in about 2.5 years. But 4 times we added 100 shares each, which were 100% paid for by those long puts. These shares that we spent 9,239,000, let's take a thing there, 00. So that would be what? Yeah, it'd be 9,000, had to be 9,000, right? 2.34 times 100. There we go. So the 9,234 we spent for these 100 shares were paid for. The $8,039 for those shares were paid for by put profits, excuse me. 9,100 there, the 7,269 here. In fact, pretty scary, because into this one over a 1.5 years, the stock is only trading $5 higher than we bought it. But for all intents and purposes, this was a $30,000 trade. $30,000 we spent on this position. All the other shares were added with long put profits. The neat thing right now, it's worth $114,000 of profit, closing today at roughly $220.10. Nope, looks like it's closing at $220.40. Don't forget, when we get called out, we're going to get called out for another $7,434. This trade should end right around 121K. With roughly a $30,000 investment. If we were to take $30,000, divide it by $121,000 of profit, that's not working. Why is it not? I better clear it. Sorry, it goes the other way. 121 divided by the $30,000 investment. We're looking at roughly a 403% return over 2.5 years. If you take your 403% return, divide it by 2.5, that averages out to 161.2% return per year. Not a bad return. As I mentioned last week, we're looking to book some profits. Micron is reaching that way overvalued point. Yes, we still have 4 weeks where, as long as it stays above $210, we're going to keep our credit. Our profit's going to be roughly 114. We should exit with $121,000 of profit on roughly a $30,000 investment. A $30,000 investment that lasted 2.5 years. This is the power of collar trading. So, if we get out, we want to invest some of the profits, because even if it is way overvalued, it still might go higher. If I was looking to take a portion of that $121,000 that we're most likely going to put a position on just to make sure that it's, I don't know how you'd say it, that it's just to make sure if we're wrong, we can still make money going higher. I would look to do a January 2007 leap bull call. So that would be using I think it's a 15 January 27 220 long call. I'd also look for the 15th of January 2007 300 short call. That's what it's going to look like. It's going to look like in some way, shape, or form, we're going to spend $61.55, get a credit in at $36.73. It will probably cost us somewhere around $25. When you run a contract of 100, if we're going to do 8 contracts, $2,500 times 8, we're probably going to spend $20,000 of our $121,000 of profit. We're going to spend $20,000 for this position. Last time the long call traded, it cost about $61.55. Last recorded trade for the short call was at $36.73. Net cost basis would be, I'm going to put a limit debit order in for $25. Maximum return, 300 where I get called out minus the right to buy at 200 equals $80. Minus our cost basis, tight cost basis of roughly $25 equals $55 net profit. Difference in 2 strike prices, which is equal to $80. Have the right to buy at 220, obligated to sell at 300. That means I've got $80 of potential profit minus my cost basis of $25, or I want to get into the trade, means $55 in net profit, or a 2-to-1 reward to risk. Roughly, it's actually a 2.2 rewards for every 1 risk. I like this trade. I like this trade for 2 reasons. If Micron returns to, let's go ahead and let's bring up a chart really quickly. Taking a look at the last year. Put that at 160. Micron return to 160 level. Yeah, I would say not 160. I'm looking at the area right here before it took off. 162, 164, general idea. If I was to see if it returns to the 160 level, I could probably take off the short call for $36, excuse me. Maybe I could take it off for $20 to $25 of profit. And then dollar cost average once. And then let it run to the end of the year. Kevin, are you planning on it going down? Well, we already talked about a pullback last week, January, February, March. We have a chart that shows, hey, its level of support is all the way down at 160. If it fell, I could also add a long put and make some more money on the way down. But something to remember, we're taking roughly, not roughly, we're taking $176,000 off the table. We're taking, including all the profit when things expire, we're taking $121,000 off the table on 800 shares of Micron. Let me say that a different way. We're taking $176,000 of risk out of this individual's portfolio. And taking that $176,000 of risk out of his portfolio, we're also taking out of it roughly $121,000 of profit. Our new risk in the trade, 8 contracts to replace the 800 shares, we're replacing that risk with 20 grand. $20,000 will be our new risk in Micron. We're booking a 403% return on investment. ROI, 403% over a 2.5-year period of time. We're risking, what, 1.6? What is 1.6? We're risking 16.66. It's got to be less than that. Divided by 6. 16.66% of the profits, or 1/3 of our initial investment, we're putting back at risk in case we're wrong and in case it keeps moving higher. Are there any questions with what we're looking to do with Micron? Just in general for the group, this is our stock replacement strategy. And yes, of course, should have known, David. Kevin, you're going all the way out to January of 2027. Yes, I want to be in this trade tomorrow or before November 21st of this year. I want to be in it a year and a day, because if I'm in it a year and a day, we get long-term capital gains on those leap long calls. What if it takes off at the next earnings and in February it's at 300? Well, then we'll be wildly profitable. And then I'll probably do a 300, 400 leap bull call. Will you get out of the 220, 300 one? No. I'm going to let it run. I really want to get the full maximum return. $80 minus my cost basis. But this is booking a profit. And there are times you need to be smart and say, you know what? A profit would be a great thing to have in my account. For those of you that are in the Palantir, leap bull calls at 13200s, you should be ecstatic at how profitable we are on that. For those of you that had shares, we got called away on our Palantir shares at 180. You should have been ecstatic with the profit on that. There's one of you that still has 700 shares. We're going to add a 200 short call to that and try to be out of that trade before Palantir's next earnings. Kevin, what are you going to do if Palantir trades above 200? I'm going to keep your positions in play to get your maximum return of 130 to 200. And we're going to add a leap bull call strategy on Palantir. Kevin, what if we get called away from Apple? I'm going to do a leap bull call strategy on Apple. Kevin, I noticed you adjusted Google today. You rolled protection up, you stuck the short call out to January of next year at 300. What if we get called out of Google at 300? We're going to do a leap bull call strategy on that one. What about NVIDIA? We're going to get called away and we're going to do a leap call bull strategy on that one. You guys might be in a, I don't know the best way to say it, a crap ton of cash going into next year. So that when we have our pullback, that could be somewhere in that 30 to 35% range, you are going to be loaded with cash to pick up all kinds of shares that get discounted on a correction on our market. But Kevin, what if it doesn't happen? You're going to be loaded up on a crap ton of leap bull calls to make a great return, taking significantly lower risk than stock ownership to make a crap ton of money and make a great return next year as well. Are there any questions on why we're taking out Micron, why we took out Palantir, why we're looking next year to be taken out of Apple/Google, why we might get taken out of NVIDIA here in the near future, why we got out of Meta a year and a half ago, but still have a lot of these leap bull calls, which are going to become profitable, and we're going to exit this December. We're just going to roll some of those profits into leap bull calls in the Meta for next year. Most likely we'll get 800, 900 leap bull call on Meta. Any questions at all? You guys are being easy on me. My audio's coming across. You guys are able to hear me okay still? All right, give me a couple OKs and I'm going to move on to our next stuff. Just want to make sure that if anyone has a question, please ask it now, because there are some people, if you have that question or concern, there's probably 2 or 3 others as well. If you're okay, you understand it, put a thumbs up, type in okay, let's keep moving on. So a couple things that came in that I think are really good things to mention. You say, Kevin, that what if it does not happen? I say, no problem. I just have a ton of cash. Correct. Are you doing these trades due to the correction you talked about? Russ, I'm really taking these trades to capture the profits. It really makes no sense on a 400% return on an overvalued stock to keep the profits or to put at risk this kind of money in accounts. And this is happening with Palantir. We already should be in some great Meta bull calls. It's happening with NVIDIA, Google, Micron, Apple. We're pretty much exiting a lot of technology right now. But if we're wrong, we're still having positions in play with significantly less capital at risk. There's a rumor Meta may split very soon. Yes, in fact, it's funny because there's a rumor Micron will split pretty soon. Last time Micron was up at 220, it split 4-for-1. There's also a slight rumor, I've only heard it once, Google's going to split around 320. So yes, keep that in mind. How neat would it be to have a ton of cash? And don't forget, pre-split, that 3 to 4 months before the split, the stock usually runs about 20% more. We've got positions in play. We'll have plenty of cash to buy back in. We should be in great shape. Still digesting, what is the worst scenario of this strategy? The worst scenario would be that everything tanks, right? That everything tanks and that we adjust the trade by booking the profits on the short call, putting that into a second leap bull call that we're now, leap long call that we dollar cost average lower, and it doesn't run back up. That's the concern. The risk in this trade is that, hey, you erase it. Jim, I like it too. The risk is that we take this position off, dollar cost average it into this one, and that Micron never gets back up to 220 next year. That would be the risk. That's why if it is going to come all the way back down to 160, it would be really smart to add a long put to try to pay off this position with profits from the long puts, credits from the short call, and being a 100% risk-free trade. But Abraham, that would be the risk of this. But again, the risk is now taking 20K of risk and booking your profits and taking off the table $176,000 of risk. Some of you have more than 800 shares. Some of you have been doing this for a while. You might have 1,200 to 2,000 shares. But this is a general idea of what we're doing to create a profit and taking that off the table. All right, great questions, everyone. All righty, here we go. Earnings are coming up. Big earnings this week. In fact, Wednesday is the day. I'm going to show it to you, but Wednesday we have Boeing, Verizon, Google, Meta, Microsoft. And then on Thursday we have Apple. Big earnings for us Wednesday and Thursday. I love the big picture. The big picture talks about a K-shaped September CPI report. Very interesting to read this. Some things basically that, how does it say? The best way to say it, for that K-type recovery, expensive things, custom cabinets, apparently fishing line and fishing hooks, higher inflation, more of what we use like food and energy has come down, and then some off-brand weird stuff like games and so forth also have some high inflation. Higher than last year, not necessarily high inflation. So it's a very interesting article to read about a K-shaped inflation. They used 15 items. I went through some other areas because a couple of you commented that some things seemed higher inflation for you than expected. This came from briefing.com. Food at home inflation is only up 2.7, significantly better than the 19% before. Food away from home, 3.7 higher than a year over year. Well, if you can afford to go out to eat, you might pay a little bit more. Gasoline, down year over year, 0.5. Electricity is coming down, but piped gas, natural gas is higher by 11% year over year. Apparel's come down a little bit. Rent and shelter up 3.5% year over year. Tenants and household insurance are up 7.5%. So out of curiosity, how the hell did Trump get insurance higher? Homeowners insurance higher? Can anyone answer that one? Because it's always Trump's fault, right? What? Why is the homeowners insurance higher? Anyone take a shot at the dark on this one? Anyone? Florida, big losses. There you go. I'm thinking actually the California fires. I'm thinking the hurricanes. Yes. Those natural disasters, household insurance is probably going to be higher. Please don't think that it is a Republican or a Democrat or a somehow that insurance is based on a political party. It has nothing to do with that. It's what we went over last year. It's why we don't invest in Chubb or the insurance companies. They're going to get their teeth kicked in the next couple of years, and it's going to be on the backs of us. Okay. Motor vehicle insurance up 3.1% year over year. Wireless phones, it's a little bit cheaper for your phone. Haircuts and personal care are a little more expensive. Laundry and dry cleaning are a little more expensive. Pets and pet services are more expensive. And it's really not pet products. It's not the food. It's the extras for the pets. Household furnishing and supplies, medicinal drugs. It's very interesting to take a look at what's going up and what's not. I've got another article because a couple of you said inflation was affecting you, and I didn't see it. But again, I'm not one that eats away out at home a lot. For the natural gas, we actually chopped a ton of wood. We do wood burning stoves. Nothing like heating a 6,800 square foot home with wood. Insurance, I kind of expected that would be higher. Motor vehicle insurance were actually lower because my kids are going off to college. I don't do a whole lot of dry cleaning. I still have my daughters cut my hair. I've noticed maybe deodorant's gone up a little bit. Pets, we feed our dumb little dog. We don't do pet services or products for it. For me, things seem to have come down by way of the insurance, but this is a great article that to a certain degree proves my experience different than everybody else's. Pretty neat expectation though. We got a rate cut coming on Wednesday. Markets are going to go higher this week. There's littler room to go higher. Right now on the Dow Jones Industrial Average, we were only overbought for a little bit. We only have 3.5 points till we're at that 70 line. We might have a bit of a pullback on the last day of the month on Friday. So even with good earnings, we might keep a little bit of protection on. Just to get through the last day of the month this coming Friday. S&P 500, 67.77. It does stay a little bit overbought longer. I really hope we see this kind of movement in November. I said we'd only go higher. I'm only guessing by 2%, but we're pretty close to being overbought up there on the S&P. Low tides sink all ships, and the S&P does not stay overbought for long. Hey, we have the NASDAQ. 67.49, almost at 70. Yes, it did the same thing. Yes, I'd like to see it go higher for longer. We just don't know. The real answer is we just don't know. So we shall see. With that said, where we're going to end November, still going on that 2% upside. That's where I finished October with 2% higher. Looks like we're going to be closer to 4.5%. I stuck a bunch of earnings in there. I'm not going to go through them, but for us, we're really paying attention to Wednesday, Boeing, Verizon, Google, Meta, Microsoft. We do have Visa on Tuesday that could go significantly higher, 360 up to 400 if it matches what American Express did. MasterCard, Apple on Thursday. We have Chevron and ExxonMobil on Friday. Not to mention Dominion, which I'm going to be paying attention to for that natural gas increase in price. Economic reports, really to pay attention, FOMC rate decision. With the market closed, no durable good orders came through. Probably won't get consumer confidence. Most likely will not get personal income, personal spending. Probably won't get GDP numbers. Definitely won't get PCE until our government opens up. Not much to worry about in economic reports. We've kind of been given a clear runway to have a great rally, great Christmas rally into the end of the year. Question asked, and I mentioned this last week, how high do you think Apple can get with its earnings? It probably won't get above 280, 285. Could it get to 300? Yes, it might. If it gets to 300, we're getting out of Apple and we're doing our stock replacement strategy. Very interesting article, Bank of America. Investment banking revenue, why it was so high. Really good article to read to see where money's coming from. I have a very interesting article on the tariffs. And this came out of KSL. Oh, no, it didn't. It came from GPT chat on Google. Some of the things that have jumped by way of food and agricultural products are coffee and beef, candy, which is interesting because I grow my own beef. I don't drink coffee. We have noticed bananas are higher, and we don't buy a lot of candy either. iPhones. We're going to stick with our iPhones for the next 2 years, but it's interesting that PlayStations have increased. Washing machines have increased, which is interesting because when you say appliances and household goods, chest freezers, refrigerators, and stand-up freezers have all come down significantly if you buy them from Home Depot. Clothing items like Target Cat and Jack leggings, I'm assuming those are women's clothings, went up a third. Women, don't let them get you to buy more clothes. Apparel and accessories, jeans increased, shoes increased. I did notice boots are a little more expensive, but I buy my boots American made, Ariat. Watches have increased. Still, aluminum and lumber are still high. I can understand that. So home building prices might be going up. Louis Vuitton bags increased by over $100. If my wife starts buying a bunch of those, it's over for me. I'm in deep trouble. Very interesting article on the US and China talks about rare earth metals. It looks like a deal is coming to place. We are not going to have to worry about the increased tariffs in November. Again, the runway is being cleared for a great Christmas rally into the end of the year. Amazon outage takes down half the internet. I hope that you have double puts on Amazon for earnings coming up for those guys. Let me be the first one to tell you, I hate Amazon. I hate Amazon because it ran up so much on crappy fundamentals losing money year over year, and it ran up to a ridiculous price, and I wasn't in it. Fundamentally, it makes no sense to be in Amazon or Tesla. Neither one warrants their price targets in any way, shape, or form. I really hope Amazon sucks at something worse than what we've ever imagined. I would love, and it probably won't happen, so I get it. I would really love, on a personal level, to see Amazon fall back down that $80 to $60 range. I know it's trading at $226.97, so almost $227. I'd be interested around 100. And they are going to have to pay out hundreds of millions of dollars for their outages to keep those big consumers, big companies, government still using their AWS system, Amazon Worldwide Services. We already hate them because they caused an issue with us in Money Block, right? And very interesting article that was presented to me by one of you. Is the stock market overvalued right now? I mentioned the comment that the 17.5, the 19 on the high side, the 15.5 historical average over the last 100 years needs to be updated. We don't care about the last 100 years. We care about the last 25. Where a 21.5, a 22 was the average. Being higher than that does make me worry a little bit, but a very interesting article that says, in essence, and it's been given to me by one of you, hey, the stock market's going to have a higher multiple. Is it worth it? Great article for you guys to read on valuations, how to interpret valuations. This was an amazing article that I hope every single one of you read as soon as I get this posted to better understand what valuations are and what they're going to mean to you. And then last but not least, Amazon announces the largest layoffs in company history. Yes! Another negative article on Amazon, because damn it, they deserve it. All righty. With that said, and yes, I'm picking on Amazon quite a bit. What questions do you guys have for me today? Again, I will not be doing the commentary on Monday. That will be with Brian. I will most likely just be attending and listening. He's been given an email from one of you guys that he's going to go over and show both sides of the equation for you guys. But what questions do you guys have that I can answer for you or try to answer? How do I really feel about Amazon? I would love to see Jeff Bezos broker than I can't say it because it's recorded. I'd like to see him live like the rest of us, that son of a gun. Not a Jeff Bezos fan in the least a little bit. Reasons why? Heck of a businessman, but no way, shape, or form do I think you should get rich, cheat on your wife, divorce her, and act like you haven't done anything wrong. Comes down to morals for me. Plus, they shut down our freaking platform for 4 weeks. Problem is, we don't have a really good replacement for Amazon Worldwide Services. Jim, great question. What do you think about the government shutdown and when do you think it'll end? I felt like the Democrats had the opportunity to gain seats in both the House and the Senate. And I went over this last week. If they would just use the process, the Appropriations Committee, create the bill, vote on the bill, pass the bill, if they really cared about the Affordable Care Act, formerly known as Obamacare, and we were to reinstate the tax credits, which are this year, well, actually going into next year, around $33 billion. I think it would be done immediately. But because they want to stick a trillion, what, $1.29 trillion down our throats, to be honest with you, I kind of hope they don't open up for till December, beginning of next year. I think it'll shoot themselves in the foot. I think Republicans are going to control all three houses comfortably, which means, in my opinion, less government workers, the opportunity to actually knock off more money off of our deficit. We'll keep tariffs in place. It'll be lower taxes for us. On a tax basis, it might mean some of the Louis Vuitton bags and custom cabinets may cost more. Buying a new house may cost more. But I think I'm willing to take that trade-off. It's going to come down to 5 people, 5 Democrats getting calls and finally saying, hey, I need to break ranks if I have any shot of getting elected again. And some of them, I think, are in their last term and don't care anymore anyway. So it could be scary. I definitely think it'll beat the 35 days. And I love the way that the current administration is still paying our military. Again, I think we're getting rid of big government and downsizing it dramatically. I think computers and AI are doing more of the work anyway. I would love to see the IRS cut to about 1/10 of what they currently are, because no one likes them. And they do a pretty piss poor job of finding the real crooks, right? No one could find Madoff. No one could find Bradford. Lots of Securities and Exchange Commission. Well, money comes in and out. They're 1099s. It's not that hard to see. So for me, I love it. I love that we're funding our military. If people were smart, they'd be out finding new jobs on non-essential workers. I'm all for a small government, less budget restraints that way. And let's see if we can't balance our budget for a 4-year term on a president. Let's hold them accountable to not spend more than we take in. That's my short and skinny answer on that one. But more than 35 days, probably the beginning of December. And by that time, I do think any of those Democrats have screwed themselves 10 ways to Sunday. Will it hurt the markets? Hasn't hurt our market so far, right? The longer it goes, maybe it's going to hurt us because we have less information coming into us. But that's the beauty of it. Think of all the money people are saving. That's not fair to say. Think of all the money the government is saving by essentially screwing non-essential government workers. But this is probably the first time in our lifetime that we've seen the IRS get screwed. And I'm trying to look at it with a very positive frame of mind. But yeah, I mean, I really don't know. I don't know, and I'm trying to make light where I do apologize if this is affecting someone here and their job. I probably have no right to make fun of it. Great questions. Are there any other questions I can get answered for you? If not, I appreciate you guys being with me tonight. Thank you very much. I hope this was educational in the front to see how we're going to take huge quantities of risk off the table for you in your portfolio. We could be wrong, so we're going to use a stock replacement strategy in case it still goes up. But our markets are most likely going to do 3 years in a row with over a 20% return. And it's just kind of common sense to expect a pretty big pullback to make the market cheap again in the near future. I don't see any other questions coming. All right, guys. Hey, have a wonderful evening. I appreciate you being here tonight. I do hope this was helpful for all of you that stayed. If you do have any questions, don't hesitate. Send me an email at info@hurley.com and hurleyinvestments.com. But really, I hope you're enjoying the gains. It's good to be away from Schwab so we can trade the way that we want to. And what a great year we've had. Guys, take care of yourselves. Appreciate you being here. Have a wonderful evening, and I'll look to seeing you guys in 2 weeks. And Brian, enjoy next week. Take care, everyone. Bye-bye.